Okay, and last but not least, let me ask Konrad Roos, Managing Director and Regional Manager for Africa for Standard & Poor's. Now, while this panel was going on, we were in the other room, and so I don't know if you've already covered this, so I'll just give that disclaimer before I ask you my question. Now, there has been much discussion of the recent downgrade of South Africa's sovereign debt rating. My question is, was the immediate response by S&P and Fitch, for that matter, warranted in light of a general view that South Africa's credit ratings were improving? One could argue that if there hadn't been a cabinet reshuffle, S&P could have been considering an upgrade.
Now that's a very interesting way of putting it, in particular with regards to the potential upgrade. I agree with you as far as some observations are concerned, that we were in a situation where the picture had become somewhat benign. Commodity prices had taken a bit of an underpinning, in particular commodities that are important for South Africa. You saw some increase in demand, you saw price increases. The global economy seemed to sort of getting it right, and demand was there. We had a fairly benign labor relationship situation in South Africa, as opposed to a somewhat more hostile situation a few years ago. There were quite a number of factors that you would have said would have worked in South Africa's favor. And the minister in February had put a budget on the table that showed a very clear commitment to fiscal consolidation and to basically achieving within the foreseeable future a trend change in the debt trajectory. That all in itself would have certainly given some comfort and would have helped to cushion any downside. Then we all know what happened. We had a very surprise wholesale government rejig, and that certainly for us raised a number of very important points. One, the way this wholesale government executive change happened for us meant that political stability was weakening, or if you like, political risk had increased. And we also came to the conclusion that, notwithstanding what we just said, that with the changes in government, with the increased political risk and the heightened political debate in South Africa, there will be an impact on growth and the fiscal performance. And time again, over the last couple of years, we have always pointed out our key concerns have always been low growth and the fiscal trajectory. And post-cabinet reshuffle, we felt there will be an impact on growth and the fiscal trajectory. There will be an impact on revenue collection, and that again would have an impact on the bottom line in as far as the deficit is concerned. And those were certainly very, very important reasons for us to consider the rating decision we made. The other main part that needs mentioning is government-owned enterprises, SOEs, or parastatals as they are called in South Africa. We've always highlighted concerns around the parastatals with regards to governance, with regards to contingent liability, and what has happened with regards to Eskom in particular, and we highlighted Eskom in particular in our press release, with regards to the tariff increases they did not get to help strengthen their own cash flow and balance sheet, with regards to governance issues in the company, with regards to future debt trajectories. We expressed strong concerns with regards to the performance and the contingent liability stemming from parastatals, and that really for us was the driver of the downgrade.
Doing business in Africa, you can't afford to be without Africa Investor.